Hello, everyone. Thank you for showing up. It's nice to see that only roughly half the audience is family and friends slash our own team. No, I'm joking, of course. My name's James. I'm one of the directors and CCO with Block Earner. So thanks so much for taking time out of your day to hear from me. I'm going to, my plan today is to have like a bit of an open conversation with you. So if any questions or anything come up, please sing out. I'll leave some time at the end for you to ask anything that's on your mind. But from me today, I want to talk to you about mainly what's on the screen, releasing equity without selling your crypto, and why we believe that is the sort of the evolution of a lot of traditional finance products and how that meets with blockchain finance. So before I get into some of the detail, a little bit about me. As I said, my name's James. I was a TradFi guy. I did the right thing, went and got a university degree in finance, majoring in commercial law. Thought I had it all worked out. And then I discovered Ethereum. And that stopped that education path pretty quickly. So I learned what digital finance can do and what it can unlock for people. And honestly, I just couldn't go back to work and sell products that I now considered archaic, right? So that started me on this path to standing here in front of you today. Along that path, I've run my own sort of fixed income DeFi funds and helped people make fixed income leveraging digital asset strategies like arbitrage and things like that. But I won't bore you with that. We're here to talk about Block Earner, which is by far my most exciting venture so far. So let's get into it. Okay, so at Block Earner, we like to say there was a time BC before crypto and AC after crypto. And we're all familiar with the traditional finance tooling that all of our apps have today. So things like cash, you can obviously send cash to one another very quickly, easily and cheaply. You can store your savings with a bank, you can trade, and there's also loans and credits available through traditional finance apps. After crypto, it essentially evolved all of those services, made them incredibly more accessible. One of the key sort of tenets of crypto is the anonymity of a wallet address. A lot of people in traditional finance will tell you that that caters to crime and nefarious activity, where in my view, it caters to inclusivity. And it helps people all around the world access the same benefits as if you're a billionaire or you've got $10 to your name. You can still access the same apps. So that's the power of anonymity to me. So blockchain finance introduced accessible yield, accessible trading, accessible credit, and we believe that both those industries coming together is what creates the true magic in our financial lives. So Block Earner is building that membrane layer, what we're calling the membrane layer, which is between traditional finance and blockchain finance. So you get all the good bits from both sides, essentially, right? So you get the great product suite from blockchain finance, and you get the great UX from traditional finance, and that births amazing businesses like ours. So it's not a crypto presentation without a meme. So here's our meme. So forget if the text is a little small, but so my parents, when they were in their 30s, they were saving for houses. It took them on average 2 years to save up for a home deposit, right? Today, that average is about 8 years of savings. So me in my 30s, how am I ever going to recover from this purchase of milk and bread? And so this paints a broader picture. So young Australians, one of the core assets to them getting ahead is obviously crypto and digital asset investments. It also happens to be the only asset that the banks ignore, right? It's the only asset that the banks won't lend against. They won't let you store it. All of these sort of opposition to the one industry that young Australians are finding traction in and building a future in. And we think that's fundamentally wrong. And it's not inclusive, and it doesn't play into the ideals of crypto. I'm just going to check my notes, make sure I'm not missing some great points. Yeah, no, we're all over it. So ultimately, where we've landed today is building the exact product that we wanted to use ourselves, right? So that's one of the best things about building in this space is you can really demand your own product suite. So now in Block Earner, we have cash, DeFi access, which I'll go into in a second, trading and loans. In the exact same way that a banking app has everything you need for your financial life, that's what we want to build, but crypto first, right? So you obviously can store your cash, you can pay people, you can receive money, you can obviously trade with us. DeFi access allows you to access some of the more nuanced DeFi products that require some technical know-how with single click, and loans is our flagship product. So we'll go into loans now, but from the top, we lend against crypto assets, Bitcoin, Ethereum, and a couple of others, and we help you release that equity without selling. And I know that creates a lot of questions, but I'll try and tackle them now. So the core way that we do this today is through a line of credit and a fixed term loan. So firstly, the line of credit, how that works is you essentially store your Bitcoin or your Ethereum or stable coins with us. You can open up a line of credit. So that Australian dollars is settled to you at 4 p.m. every single day. We do it every day on the dot. And that sort of arbitrary restriction that you get from banks where it is, hey, you have to call to increase your credit limit, or perhaps you get charged for repaying early. Things like that don't exist in our business because we're a crypto brand first. So a line of credit is for any sort of unforeseen costs. Say you store some Bitcoin with us, you know that you can always access that money same day, very effectively. In that product, we lend from $50 all the way up to $5 million per user. Again, being a crypto-first brand, there's no reason to have those arbitrary bumps along the road in that process. It takes 2 minutes to apply, you're approved, and off you go. The fixed-term loans is for a slightly different purpose, because perhaps you don't want to repay this loan in 12 months. Perhaps you've got a home that you've got your eye on, and you want to top up the deposit. Or perhaps you're starting a business that might not generate income for the first year, or things like that. That's why we developed a fixed term loan, which allows you to go all the way out to 5 years with the rate that we have today, which, sorry, I should have mentioned, is 9.5%. I know people were about to ask. It's 9.5% interest, and whenever you open a loan with us, it's fixed for the entire duration. Again, I know it sounds like I'm going on and on about this, but we're not going to change the rate on you. That's an old school, traditional way of thinking. When you open a loan, it's fixed for the entire duration of your loan. Core difference between the two, one makes monthly repayments, the one on the left, and one you can pay on your schedule whenever suits you. But into some very exciting things, which I don't know if we're quite ready to announce yet, but I did want to just make a point of being a crypto-first lender, it enables previously unimaginable products. And that's one of the beautiful things about building in this industry. So imagine having your crypto wealth immediately accessible to you in your pocket without selling it anywhere in the world. Now that is the sort of vision of borderless money that a lot of the crypto tokens and blockchains were built on. That was one of the core ideals, was borderless money. And we're finally starting to see those problems solved with businesses like ours. So anywhere Mastercard's accepted, one day you'll be tapping a Block Earner card, and that's an exciting prospect. You don't lose your crypto exposure. Next, and I'm going to avoid my CEO's gaze because I'm not supposed to talk about this one yet, but we're entertaining another previously unimaginable product, which is a crypto-backed mortgage. So today, it's, as I was saying before, it can take up to 8 years to get the money together to save for a property, which is making people delay having families, delay getting married, delay all these other expenses in their life. And we're hoping to, bring the market back to that equilibrium point. So because we take comfort in the liquidity of crypto, We know that you can trade at 24/7, 365. We already have tapped into extremely deep liquidity sources all around the world to power up our other products. We now know that we can offer really interesting products like a 0% deposit if you just store your crypto with us, right? We essentially release the deposit out of your crypto on your behalf and then help you write that mortgage. Now there's a lot of nuance to that product, and I'm sure it'll change a lot over the years, but to me, that is something really exciting and solving a real world problem, which is the holy grail of crypto. So this is just a little flex from Block Earner. We've had an incredible formation years. The last 3 years have been largely formational for us, building these products out. And now we can stand here today. We recently transcended crypto and won the Lending Innovation of the Year award put on by WeMoney. And that is an incredible accomplishment for a brand like ours. We know that we're making real differences to people in their lives. And I've just whacked on here too the supported assets, so you can understand them. Definitely the plan before somebody asks is we will write loans against Solana, and we will do it one day, just not today. And for the meme coiners in the room, the answer is no. Okay, so to leave some time for questions, and I'll just make sure I haven't missed. Yep, no, we've covered it. So just before we dive into questions, this slide is about explaining how accessible and app-enabled our business is. From the beginning, we wanted this to be in your pocket. So that's probably a little bit cliche. You hear a lot about that, but it's a core function of our business is to make sure that wherever you are, you're not going to get caught out by some margin call or anything like that because you didn't have access to your computer or was back in the hotel or whatever, right? So everything is accessible in your pocket, live, good to go. And the last point I wanted to make about that accessibility is that we always plan to lend in local currencies. Now, I know there's many lenders, and there's a lot of us in the room that have probably been burned by businesses like Celsius and BlockFi and other naughty words like that. The key difference with what we do is we lend into the local currency. So we lend Australian dollars. Soon we'll be lending New Zealand dollars, Singapore dollars, Hong Kong dollars, you name it. We'll never be lending a currency that you don't use. We'd much rather not service that market. Because is that really borderless money? If you're now exposed to a dollar that isn't even what you're using day to day, we see that as fundamentally wrong, and that's our problem to solve and not one we want to pass on to the user. So that's us. We've got roughly 10 minutes for questions. Thanks so much for coming along, and I'll go to the audience. Where do we store the crypto? Yeah, great question. Okay, so where do we store the crypto and where do we lend it out to? Yeah. Okay, so firstly, we don't lend out your crypto. Our business is remarkably simple, right? So we borrow money for less than what it costs us, or less than what you end up paying us, right? So we make a net interest margin there. That's how our business works. Where we store your crypto is in a custodian that you've probably heard of named Fireblocks. So we use their two of their security layers. We use their multi-sig security, and we also use their whitelisting function. And so how we do that is the directors at Block Earner are the signatories on the account, and we have an external signatory as well. Self-custody, any chance of that? So look, short answer, yes. Like, how amazing would that be? I think we consider what we're building today stepstones towards there. To be completely candid, what we have to do, because ultimately we raise money to lend, right? So we're building comfort with whoever lends us the money to know that we always have access. Like, what is the chance of this debt going bad? Right, that is ultimately the question, and ultimately the rate that they will lend to us at is affected by the likelihood of the debt going bad. If we don't have custody and the borrower has custody, the chance of that debt going bad is vastly higher, right? So the rate, that 9.5% number, that goes through the roof. As soon as we start saying, oh, look, we'll have to call them, they'll have to opt in, they'll have to let us sell the asset, things like that, the value prop for them fundamentally changes. So for us today, our plan is we're going to build this as big as possible and make it as compelling as possible for any tier one lenders out there who will, it'll be impossible for them to ignore. So today, self-custody is not supported. Absolutely something, as a crypto head myself, I'm with you, I hear you, I really want to do it. Take some comfort that this business is run by people in the same shoes as you. I hear you, yeah. Okay, does it trigger a tax event? Not a tax advisor, not gonna give advice, but the advice we've received is that because the wallet address you move your assets into is unique and owned by you, we also have no legal title over the asset that you store with us. The advice we have is that it's not a taxable event. Unfortunately, that's all I can really comment. I studied commerce a long time ago.
Great presentation. Just wanted to ask, banks have a 200K assurance if they collapse. What's the insurance for Block Earner in the event of that scenario?
Yeah, look, I definitely didn't expect to make this presentation without some spicy questions, so thank you for that one. No, look, the short answer is the bank insurance is backed by the government, right? The banks didn't go out and get insurance policies. The government did that for them. And I don't know about you guys, but I think the government's a few years off doing a program that insures your crypto holdings with businesses. So unfortunately, there's no such cover like that with us, endorsed by the government. However, the assets stored in our Fireblocks custody are insured. It's underwritten at Lloyd's, not the Australian government.
After we take the loan, what happens if the asset goes down? Is that fixed for the entire duration of the loan?
The interest rate?
No, like what happens if the asset goes down because the LVR changes?
Yeah. Okay. Yeah, so on this picture, you can see our beautiful UI. And so how it works is if the asset, if the market moves against you, and your asset's falling in value. So once your LVR hits different thresholds on the way up, the frequency that we reach out to you increases. So we'll start to send you more text messages, more emails, more push notifications to let you know that it's getting to a risky state. If you cross the 60% mark, we consider that the riskiest level that we're comfortable with, right? So we'll then let you know that from that point, you have 30 days to bring it to below 55%. And that's all that's required. So you're never going to wake up one day and have less crypto. You're never going to feel as though you weren't informed long before this event happened, right? You have that 30-day window. So people are familiar with margin calls and things like that. Think of this as like a 30-day margin call. As soon as it's reduced below 55%, the loan's then cured. We consider it cured. The notice we gave you is voided, and the loan continues on. If it's not cured during that 30 days, then the borrower does surrender some crypto. The borrower only surrenders the amount required to bring it down to 55%. You're never on the hook for the whole amount, anything like that. It's just that piece that's required to bring it back to what we consider a safe range. Sorry, Eric. Is it the same for a mortgage? It's probably why I shouldn't have mentioned it today. No, I was just too excited. So, short answer, probably not, no, right? Because mortgage is probably going to be a much larger sum of money, much harder for people to come up with, things like that. So we'll work out other ways, a more equitable program, yeah. We'll have more detail about that early next year, yeah. Okay. Yep. Yeah, so question is, how do we set the interest rates? And look, the short answer is we set them at where our lenders will give us plus a margin. So as our business increases in legitimacy and increases in size, then our rates will more closely follow what you'll see a traditional lender, like the RBA rates and things like that. But for today, we just don't source money from those sources. So it's an independent rate that we set. We review it monthly, but again, that protection's in place for anyone borrowing is you get it for the full term of your loan. Yeah, so if you open a loan with us today and James wakes up tomorrow and says, hey, interest rates are going through the roof, that's my problem, not yours. Your rate's fixed. That's a totally fair question. If it goes the other way, if we drop the rates, can you refinance? Of course you can. Yeah. So the question is, do we have a lockup period? So assuming you mean after you've repaid? Yeah, so no. The answer is no. So as soon as the loan's repaid, then the crypto's released the same day. So for right now, we release all the assets at 4 p.m. every day. And early next year, we'll increase that to more than once a day. So probably something like 10 a.m. and 4 p.m. So imagine you repay your loan in the morning, your assets are back with you at 10 a.m. So there's no minimum lockup. Okay, questions drying up? Oh no, here's one.
Do you require financials or tax returns to substantiate serviceability, or do you just do it on the LVR basis?
Oh, sorry. Yeah, so look, at the end of the day, we're a responsible lender first. So we're heavily regulated here. So we do checks like that. So we do, but it's all on a declaration basis. So we don't ask you to provide us with a tax return, but you will declare to us in legal document that this is what I make, this is roughly what I spend, and we make an accessibility judgment off that. To be completely candid, the accessibility, if you choose to repay with your income, is important, right? We need to make sure that we're not making you your financial situation worse by writing you this loan. But if you choose to repay your loan with the crypto you're holding in security with us, then the accessibility is lighter, right? Because we know that we're holding more than that value at all times, so it's less important. Yeah. And just on that topic, sorry, when you mentioned tax returns, I thought you were going to mention lending to a business. That actually sits outside all of those rules, so we have a little bit more of a flexible lending arrangement if you borrow under an ABN. All done. Going once, going twice. All done. Okay, thank you so much, guys. Thank you for coming along. Nice to see you.